Tesla stock dropped more than 30% in the span of 3 months, and there's more pain to come. What's up, homie? This is Howie. I'm a principal AI engineer. Welcome back to HowieVerse, where investing is driven by data. In this video, we are going to discuss three things. The first one is the price action of Tesla stock. The second one is the fundamental of the business. And the third one, this is going to shock you, the history of how Tesla has been performing. Let's get to it. First, we are going to look at the price action of Tesla. And Tesla is currently trading at $360 and some change. So what Tesla has been doing here, you see this upsloping trend line in the red, and then it has broken down over here. And it also retests over here. Since the retest on this line, it has been dropping all the way to the downside. And in my belief that what Tesla is going to do is that it's going to drop all the way to test this line. And then you can see this region over here as well. There's this green downsloping trend line and also red upsloping trend line, where the places that the stock is going to end up at. And the price of Tesla is going to do two things. Either it's going to bounce, where it's going to break this green downsloping trend line, or is going to break down and is going to break down the red upsloping trend line all the way to the bottom right here. And where is that? That is this trend line over here. This red upsloping trend line dated all the way back to, it tested here, right? Here is April 2024. And then this is January 2023. And also, if we date it back all the way to March 2020, everyone knows what happened in March 2020. So this red upsloping trend line has been tested for so many times, right? And it was dated back all the way to COVID low. And if you can see as well, this down upsloping trend line, it is also the bottom of this parallel channel. Lastly, if Tesla never break this downward downsloping trend line in green over here, most likely the stock is going to go all the way down here, and then it is going to break and then some sort of retest. And then what's gonna happen is that it's going to go all the way in this region. And where is that region is around September 2026, where I believe that would be the bottom of Tesla. Hey, it might not get there. I totally understand, but the price range that I'm expecting is at around $207 all the way to $240. So in this region over here is where maybe Tesla is going to get a really big break. Nevertheless, this support line that is also going to be very, very important as well. So time will tell, and we're going to see the price action where it's gonna go in the next several months, all the way to September 2026. The second thing that we're going to look at is the annual report of Tesla. And currently, Tesla has two important segments. And Tesla says we operate as two operable segments in automotive and also energy generation and storage. For automotive, they are currently manufacture 5 different consumer vehicles: Model 3, Y, S, X, and Cybertruck. One of the very important thing about Tesla is the infrastructure, and they spend a lot of money in the infrastructure. In my opinion, they spend about more than $2 billion in infrastructure to support the business in clean energy and transport and autonomous robots. We're investing in and developing the necessary supporting infrastructure. This includes additional compute hardware So this is data center to better enable the massive amount of field data captured by our vehicles to continually train and improve these artificial neural networks for real world performance. In 2025, we further expand Cortex, our training cluster at Gigafactory, Texas, and announced a new collaboration with Samsung to manufacture advanced semiconductor to AI inference and training in the US. We are currently building Cortex 2 at Gigafactory, Texas to further increase our training compute facility. So essentially, this compute facility is a data center, and as we know from this AI frenzy, the data center is very, very expensive to build. And who knows that this is going to pan out or not. And apparently, Tesla is investing in the future, and the future is in this infrastructure. Yes, one day we're gonna have self-driving car. However, at the moment, this is a really huge anchor that bogged down the Tesla stock because of this infrastructure investment. So if you buy Tesla stock right now, is essentially you are betting for the future income. In addition, Tesla has been underperforming in comparison to Nasdaq Composite since 2022. If you look at this August or September 2022, Tesla cumulative return hasn't really been paying out except for this few short windows over here and also over here. And it seems like right now it's just getting a little bit above Nasdaq. And for this motor vehicle and passenger car bodies public company group, you can see is that since what is this December 20, like February or April 2022, Tesla stock hasn't been performing better than this motor vehicle public company group. The next thing that we're going to look at is Tesla balance sheet. We are going to see if Tesla on the risk of bankruptcy or not. However, when I look at the balance sheet, it seems like the balance sheet is great at this point in time. If you look at the cash in hand, it has the cash of $44 billion. If you take the cash and cash equivalent plus the short-term investment, seems like Tesla has a lot of runway to go. And if you look at the current liability, it only has $28 billion to pay in the current year. One thing that strikes me is the long-term liabilities that has $12.86 billion that they have to pay. Yes, this is not that big of the chunk. Tesla could easily pay it with their cash that they have. Nevertheless, this has take up about 20% from the previous year at $10.49 billion. Now, that $12.86 billion for the other long-term liabilities, they have a liability because they have warranty. They offer warranty to the people who buy their cars. And essentially, those are the things that they have to pay back if the warranty is going to get claimed by the buyers. And other things on the long-term liability is like the leases of the factory in Gigafactory Shanghai and the Mega Factory Shanghai. So essentially, they lease their property over there where it's also included in this $12.86 billion. The one thing that strikes me the wrong way about Tesla is that in the income statement, if you see that the business is actually contracting. If I look at Tesla stock itself and I look at the PE that is currently trading at 300 multiple, if I just look at that without touching the income statement, I would assume that Tesla is growing like crazy 20, 30, 40%, or even 100%, right? However, this is not the case for Tesla. If you look at the business that is contracting, where in 2024 is making $97.69 billion, and this year it go down by about $3 billion or 3% at $94.82 billion. So the business in terms of revenue is actually contracting. Not only that, if you look at the net income is also contracting, right? So it went from $7.1 billion, now it's only $3.8 billion. Like I said, they are investing in the infrastructure, like I mentioned in the earlier of this annual report, and the infrastructure spending in the R&D. If you look at the R&D over here, at $6.4 billion that they're spending this year, and last year they're spending $4.54 billion. So that is 41% increase in just R&D. Not only is 41% increase, they are also a big chunk of the net income, right? So if you think about the R&D that is increasing by about $2 billion, that $2 billion is a huge chunk of this $7.1 billion. The last thing that worry me the most is the investing in XAI. And this investing in XAI essentially is not a company, or previously was Twitter. And it says here on January 16, 2026, following review in a manner consistent with the board fiduciary duties and companies related party transaction policies, Tesla entered into an agreement to invest approximately $2 billion to acquire shares of Series E preferred stock of XAI. So essentially, the net profit was already at 3 point something, $3.4 billion, and they are going to spend more on this XAI venture at $2 billion. Eventually, at the end of the day, Tesla is just going to make about $1.4 billion, assuming that the net income stays the same, right? And if, with that being said, the PE from 333 PE or multiple right now, if that happens, there's going to contract that even more. And if Tesla just stay at the price that is currently trading now, the PE is going to be 900. So think about it, 900 PE for a business that is contracting, that is spending crazy in infrastructure. Essentially, it's a speculation of the Tesla investment is going to pay out in the future. Lastly, we're going to look at the history of Tesla performance. And this is actually going to blow your mind, right? So essentially, when I bought Tesla back in the day, I bought it at around 2019, where about right here, where the company revenue trailing 12 month is only at $24 billion. And at the time, it was still a speculation if Tesla is going to make it. There is a bankruptcy that's happening. However, the things that I really liked Tesla doing at the time was they were able to penetrate the market in China, and they investing in essentially the Gigafactory in Shanghai. And that was the S curve that they make at the time. If you look at this in 2019, right? So the first quarter of 2019, $22 billion, and then $24 billion, and then $24 billion, and then $24 billion, $26 billion, $25 billion. So essentially, Tesla revenue at the time in 2019 and 2022, it was kind of flat. Like the stock is not going anywhere. The thing at the time was essentially the investor are looking for something that is going to pay out in the future, not essentially at that time. So after that, Tesla stock has been paying out. If you look at this, it has been going on this parabolic move where currently it's making at around $95 billion. So this is an S curve, right? An S curve that is plateauing over here, and then they make a breakthrough in their investment, and then the investment payout, and they got a really big payday. Now the story of the revenue at Tesla actually tells us the same thing, right? So since like about the peak of the previous S curve, Tesla was been making $95 billion over here, $96 billion, $94 billion, and today is making about $94 billion. Essentially, Tesla revenue has been flat since Q2 of 2023 over here at $94 billion, and today is making $94 billion. So essentially it's been flat, and what's investors been looking for, why the PE or the multiple has been trading at 300 multiple, is that the investor are looking at another S curve that is going from here all the way to the high here. So eventually that is what investors are speculating on, since of the success of Tesla in 2029 has been really big payout for many investors, including myself. And if you look at the same story over here, where it's essentially flat, and Tesla is looking to replicate the story that it was successfully did in 2019. Essentially, the story of Tesla, why it is currently trading at 300 plus multiple, is because investors are looking for that next S curve for Tesla story, see if Tesla can replicate the success that it did in 2019, whether it's going to be Optimus robot, it's going to be self-driving car, or maybe the XAI. If you like video analysis like this, please hit the like button down below. It will help out the channel a lot. And if you like more update like this, please subscribe. I'll see you in the next one.